How are we looking? Let's see. Looks like we're live. Welcome to the Blockchain Report, where we discuss all things blockchain technology, digital assets, DeFi, NFTs, and much more. Today, we're going to be covering a little news on the FTX fallout, what that means for the markets, how the markets are looking, how they've responded, and what is going on. So we're going to look at where Bitcoin's at. Total market cap fell well under $1 trillion. Bitcoin dominance, it's at this point, this is all irrelevant except the gas. Gas is pretty good for Ethereum. If you're looking to make transaction fees, then now is the time to do so. And I need to adjust this a little more. Oh well. Yeah, we'll look. Bitcoin, ever since the FTX news and scandal, whatever, fraud, whatever you want to call it, definitely not a good thing. Bitcoin's just been kind of trending sideways. It looks like it's starting to point up. You got the RSI and the MACD starting to kind of curve a little bit. Maybe, unless we get some big news hit on another exchange, maybe another fallout, then I think we could come back up, maybe even get close to this 19K as a snapback, retest this resistance, and then come back down. I think we got a lot of fallout from this. And Ethereum, the biggest ones that were hit were Solana. I mean, it was above 30 just a week or so ago, or a week and a half ago. Now we're trading at 13. Yeah, it's sorry, I got something in my throat. Need some water. Yeah, a lot of Solana projects, Solana-based projects. I know Helium just recently migrated some of their network data over to the Solana blockchain, and they took a big hit too. But everywhere around the space has taken a big hit. I mean, Cardano seems to be holding up pretty well, considering when Bitcoin was this price last time, around here, yeah. So Cardano was half what it is now when Bitcoin was at the same price. So that's pretty good as far as this token goes. But Bitcoin, we really gotta pump this if we want to hold. I mean, look at this is the 1 hour just dead, just flat. I think we're just really waiting on what's going to happen, and with the FTX situation. And also there's a lot coming out from projects who worked with FTX and Alameda and were essentially milked for all their worth, is a nicer way to put it. But they basically stole these projects. Funds stole some of their IP, created their own white papers on projects that they had stolen certain ideas from different projects and put it together, and it's a big mess. It's a big mess, but we won't go too crazy deep into the news, since there has been a lot of, it's just been FTX, Sam Bankman-Fried stuff. It's kind of a lot. There's been a lot in the past week. We won't go into all the details, but I'll just kind of give you a recap. But Alameda had secret exemption from FTX liquidation protocols. The John Ray detailed in a litany of management failings at a crypto exchange, which collapsed after revelations about its relationship with its trading arm. And anything that you see from SBF, his tweets are very, very suspicious. But Alameda Research, the trading vehicle at the center of SBF and FTX's downfall, had a secret exemption from the crypto exchange's liquidation procedures. According to bankruptcy filings Thursday, the revelation in court filing, though scant on details, would indicate that Alameda had an advantage when making risky, leveraged trades on FTX. Crypto derivatives exchanges such as FTX automatically sell the collateral of traders who borrowed its money to place bets that turned south. John J. Ray III, the new CEO of FTX, who characterized Alameda as a crypto hedge fund, cited the secret exemption of Alameda from certain aspects of FTX.com's auto liquidation protocol, among a list of poor security and financial controls that have been uncovered since he took control of the company at the early hours November 11th, shortly before it filed for bankruptcy. The blurred lines between Alameda and FTX, two supposedly separate businesses, had proved crucial in the collapse of the company. It was a revelation by CoinDesk that Alameda's balance sheet was stuffed with FTX-issued tokens that led to questions about the company's financial health, eventually snowballing into insolvency. The allegations are part of a litany of poor management practices highlighted by Ray, previously responsible for sweeping up the mess left by Enron, who said FTX was the worst failure of internal controls and record-keeping he has seen in his 40-year career. This is this is the same guy that is he's been part of many cleanups in like businesses and even Enron. He said this is the worst he's ever seen. That's pretty bad. He also highlights practices such as registering Bahamas real estate and employees' names using company funds, and managers approving disbursements by posting emojis on an internal chat platform. So this was not run very smart. I mean, it wasn't a smart operation. It was just dumb. I mean, the way you set it up takes a lot of thought, but it's just a dumb idea. Using funds from essentially a hedge fund, but over leveraging yourself and issuing fake tokens. That in itself is fraud. Wire fraud, I think. There's a ton of stuff that they violated, and they're being painted as these kids who just messed up, and like this wasn't thought out from the start, which this has been premeditated from the very beginning. And I don't know if many of you follow BitBoy on YouTube, but there was a really good. Here, I'm gonna move these over here because there was an amazing talk or interview the other day with Hussein Faraj, CEO of New Genesis. And I don't know the extent of what New Genesis is, but from what it sounds like, they have a here. We'll look it up. But they have a technology that can read markets, and yeah, is that it? No. Let's see. Oh, I want to make sure it's the right one. Okay. Yeah, I don't know much about New Genesis, but the interview was really good. They can explain it to you a lot more in the interview. But essentially, FTX and Alameda reached out to them to partner, and when they listed this project's token, they essentially liquidated everything. They stole all their funds, and when Hussein and his team went to FTX and Alameda to talk to them. They basically tried to, Alameda just blackballed them. They just said, no, we don't care what you do. We're, gonna take this and you can't have it back. And they even, and FTX even asked Hussein and his team for their source code, which that's already, why do you need these people's source code? But I'm gonna play this little video clip right here. They kind of split it in half. Second half is, I don't know this guy's name, but he was on 60 Minutes talking about them trying to give the SEC, sorry, trying to give the SEC information on Bernie Madoff and his Ponzi scheme. So it's kind of history repeating itself in a way. But here you go.
I'll give you everything that's already out there. We have a lot more, right? So we've also contacted the SEC many times. SEC never got back to us. Months ago, not now. No, we're contacting the SEC to tell them they're trading fake coins.
How many times did you send material to the SEC?
May 2000, October 2001, October, November, and December 2005, then again June 2007, and finally April 2008. So 5 separate SEC submissions.
Yeah, so many times, I can't really hear very well, so I'm going to put this on. Oh, sorry, the sounds. So I can hear this one, because this is some juicy stuff. And BitBoy also had on another guest from the CEO of Reef, another project. Don't know much about it, but they were in the similar situation as New Genesis and had their funds totally liquidated and basically got called a rug pull by FTX and Alameda, and just, yeah, it was bad. Basically stealing this project and saying that, oh no, they're fake, they're a fraud, when FTX is the one who rugged them. It's sick. It's sick. So says his company realized what they were up to when they began to negotiate so they could gather evidence. They recorded everything, and Hussein he's going to be releasing a ton of evidence, recordings, documents, videos. It's going to be really interesting, and he's working with BitBoy and all many other projects who worked with FTX and were basically destroyed and paid off by FTX and Alameda to be quiet. So here's a little clip from him.
And you've got to see how we did it. You've got to see how we did it, because they're used to people being corrupt, right?
Yeah.
So they offered us, the moment we went to them and they gave us an offer of close to $1 million Australian straight away. They don't know our losses. They think we're just a company. And then $600,000 was offered to us as hush money. But we have to sign that we wouldn't be discussing this again. This is the first offer. You should see what I asked for. No. You've got to see what I demanded. And at the end, they realized we were playing them, because by the final email, when they wanted to go to arbitration, they're saying, listen, we'll give you guys whatever you want. Basically, in the email, look, you'll leave happy. And we asked for everything. I mean, I was going to ask for a super yacht. That was the next thing I was going to ask them for. Because when we realized what this was, we go, shit, forget about Newcoin. This is the whole market. If these guys can do it, that means everyone else can do it. If these guys are creating synthetic Newcoin, because right now, this is where it becomes very interesting. This is finished. It's over. It's done. We're asking for our liquidity back. And this is when I say we decided not to, we negotiated to get evidence, right? You've just got to understand that. But this was much bigger than one single company. This became adamant that this was a sophisticated arena which was being utilized to make, I'm talking about the average person. I mean, who was losing money? The average person that was actually putting their money into crypto. And they did.
Yeah, it was set up from the start to steal people's money, And SBF himself has, I believe, I don't know what the confirmed number is, but hundreds of millions of dollars, if not at least up to $1 billion in a personal loan from Alameda. And these people were blowing money on, they're blowing money on houses, on well, probably a lot of crazy sex parties, but we'll leave that at there. They had houses in their employees' names, but yet SBF says that he doesn't care about money, and he wants to give it all away. And he did give a lot away to political donations. To see, there's this guy has a pretty good video that I just saw right here. And if you can't, yeah, it's donated $40 million to Democrats and their causes. It just doesn't look good. It just doesn't look good. This story goes way deeper than crypto, and it's got ties very, very deep. And we'll see once we get more evidence come out on, let me put this back. Once we get more evidence out on what happened in the back end, because that's what I'd really love to see, is what happened on the inside. Yeah. But now this is going to lead to greater collapses. I haven't even talked about BlockFi. Yeah. And this isn't good either, BlockFi. Just another exchange going down. Filed for bankruptcy. My girlfriend had maybe $50 in here, so not a huge loss. But I just can't imagine if you have your whole life savings in something like this. It would just make me sick, man. But now one of the biggest players in the game, Genesis crypto lending unit, is halting customer withdrawals in wake of FTX collapse. The unit, known as Genesis Global Capital, serves as an institutional client base and had $2.8 billion in total active loans as of the end of the third quarter of 2022. So, lending arm of crypto investment bank Genesis Global Trading is temporarily suspending redemptions and new loan originations in the wake of FTX's collapse. Interim CEO Durar Islam told customers on a call Wednesday. The unit, known as Genesis Global Capital, serves as an institutional client base and had $2.8 billion in total active loans. Then the Q3 2022. So Genesis Trading, which acts as Genesis Global Capital's broker-dealer, is independently capitalized and operated separately from the lending unit, Islam said. He added that Genesis Trading and custody services remain fully operational. Islam told the participants on the call that Genesis is exploring solutions for the lending unit, including finding a source of fresh liquidity. He said Genesis intends to detail its plan to clients next week. Genesis owner Digital Currency Group is also the parent company of CoinDesk. Man, it goes real deep. It goes real deep. So if DCG goes under and Genesis falls out, you're gonna see, take 10K off of this. That's what you'll see, at least. But today, Genesis Global Capital, Genesis, the lending business, made the difficult decision to temporarily suspend redemptions and new loan originations. The decision was made in response to the extreme market dislocation and loss of industry confidence caused by the FTX implosion. This decision impacts the lending business at Genesis and does not affect Genesis's trading or custody businesses. Importantly, this decision has no impact on the business operations of DCG and our other wholly owned subsidiaries. Now, I'm just going to say this after I'll read this real quick. So, decision follows a punishing period for the industry after this month's implosion of SBF's crypto companies FTX and Alameda Research. Islam said FTX's dramatic fall had spurred withdrawal requests that exceeded Genesis' current liquidity. Last week, Genesis disclosed that its derivatives unit had about 175 million in locked funds in FTX trading account. As a result, DCG opted to strengthen Genesis' balance sheet with an equity infusion of 140 million. The announcement was noted by Gemini, the crypto exchange and custodian that has a partnership with Genesis. So we're working with Genesis team to help customers redeem their funds from their Earn program as quickly as possible. We are disappointed that the Earn program service agreement will not be met, but we are encouraged by Genesis and its parent company DCG, Digital Currency Group's commitment to doing everything in their power to fulfill their obligations to customers under the Earn program. Now, just because it says that decisions impact the lending business does not affect Genesis's trading or custody business, I just don't take that at face value, because SBF was saying that their assets were fine. They were fine. They were great. And then not even a day later, it just comes crashing down. And Genesis was asking for $1 billion in capital, and they've been turned down. So we'll see how this goes. They need this by Monday, I believe. But yeah, not looking good for a lot of lending platforms and exchanges. But DeFi platforms have actually seen a huge influx in profits amid FTX collapse and central exchange exodus. Finance Redefined. The bears were in control for a second week after FTX collapse, leading to a market-wide dismal performance, including top 100 DeFi tokens. So this is Finance Redefined, your weekly dose of essential DeFi insights. And DeFi platforms see profits amid FTX collapse and central exchange exodus. A week after the fallout from the FTX and Alameda chaos, some on-chain data points are interesting to observe. Although record amounts of Bitcoin and Ether are leaving exchanges. There's a little bit right here. Yeah. Not all dApps and protocols have shown growth, mainly due to reliance on FTX and Alameda. Combined with migration away from centralized exchanges, the volatile crypto market has users trading in record numbers. According to data from Token Terminal, the daily trading volume of perpetual exchanges reached 5 billion, which is the highest daily trading volume since Terra Luna and Terra USD meltdown in May. These are just some headlines. That's cool. Go over these little headlines. FTX collapse followed by an uptick in stablecoin inflows and decentralized activity. So your Uniswaps, man. Uniswap. Decentralized exchange. Now I am also doing a video series on Beginner's Guide to the Blockchain, which go to my videos. Oh, no. Look, I'm live. Oh, no, I want my channel. Being a little slow. So the Beginner's Guide to the Blockchain Ecosystem. I start with Ethereum or Bitcoin and Ethereum. And it kind of covers some decentralized exchanges. And make sure you check that out. I'm going to be doing a lot more of these videos because they are very, very much more secure and stable than centralized exchanges, because you have the removal of bad actors. Now, it's not everyone's cup of tea because you have to be really, really smart with how you move your funds and making sure that you don't lose your tokens by sending them to the wrong address. And there's just a lot more at risk of you losing it yourself than being hacked. But I'd rather have control of my own stuff than have it on a decentralized exchange than have it on a centralized exchange and possibility of somebody else taking it all off, because that's not just on me, but that's on me and somebody else. And if you can just remove the amount of sketchy people in between or entities that don't necessarily have your best interest in mind. But yeah, crypto scammers are using black market identities to avoid detection. 1inch is another decentralized exchange like Uniswap. So 1inch seeks to optimize gas costs with its new V5 router. And where is 1inch? Let's see. I don't know what the, okay. So this is another one. You can trade classic mode. They got staking, liquidity protocols. You can earn. You can develop. You can bridge. And you can buy. So it's kind of a cool all-in-one stop shop. But we'll update that later. But that's really about it on the FTX front. There's not really, there's a lot of stuff happening, but it's just, at this point, I'm not sure what is a rumor and what's not. But a couple more things before I jump out of here. Not FTX related, but Cardano is launching new privacy blockchain and token. Charles Hoskinson, CEO of the firm that's behind Cardano, says the network will strive to preserve privacy while giving access to regulators and auditors. So Input Output Global, IOG, the firm behind Cardano blockchain, is releasing a new privacy-focused blockchain called Midnight and a token called Dust to accompany the new network. Midnight, which is underpinned by zero-knowledge proof, ZK proof technology, is one of many side chains now being deployed on Cardano and will go beyond previous privacy coin projects by delivering zero-knowledge proof smart contracts. IOG CEO Charles Hoskinson said during an event at Edinburgh University in Scotland on Friday. The system will walk the line between preserving privacy and allowing regulators and auditors a backdoor into the system when permission is granted. That's the key. When permission is granted, you want to have a blockchain that has some privacy. I mean, privacy can be a good thing. No, it's definitely a good thing, but on the blockchain, it's very transparent. It's very transparent. I can go to Etherscan. Well, Etherscan isn't the greatest because they've been apparently censoring certain transactions. But let's go back to CoinGecko. We'll go to this Bitcoin Block Explorer. And you can see all the on-chain transactions, what addresses they're going to and from. Now, there's certain information that you don't always want people to see. Maybe you have some information going on the blockchain that has your identity information, the social and stuff like that. But if you can have a privacy chain that can keep certain things about you private while allowing if certain regulators and auditors backdoor only when permission is granted. That's the key, is only allowing them to see what they need to see for a specific amount of time, only when they're allowed to get in and see that. Midnight has evolved as privacy coin technology where everything was anonymous by default, which is what Zcash and Monero did with snarks and ring signatures. Hoskinson said in an interview with CoinDesk, referring to two other privacy coins and their encryption methods. This is a completely new way of writing and running private smart contracts and private computation, so you can have a private decentralized exchange or go mine an anonymous data set or these types of things. Privacy coins have always been lionized by crypto libertarians, but have been viewed warily by regulators fearful of how the technology might help facilitate financial crime, just like the dollar. I mean, that's the thing. They point to this one thing. Oh, this is bad. This is bad. This is not good. When in reality they have the same bullshit going on in traditional finance. But you can't tell me that they're fearful of how the technology might help facilitate financial crime when, yeah, that's true in like one sense of this whole picture, but you can't just strong arm the whole space because of one little thing. Got to let the markets play themselves out, and there's going to be bad actors. We just got to do a good job of weeding them out. But yeah, privacy is something that every business has a legal requirement to explore these days. Although he noted that difficulty in figuring out how to add privacy to blockchains has prevented its adoption. You need programmability. You can't just take Zcash and fork it and somehow it'll work. What was needed was the ability to write this stuff in a normal programming language, not some weird snark thing, but JavaScript or something like that. Something developers can understand and get a guarantee you have privacy. A paper published 2 years ago back by IOG titled Kachina, which dives into privacy-enhanced smart contracts, is now coming to fruition in the real world. Hoskinson said, this has generated interest within the once hyped world of enterprise blockchains, he added, explaining that Midnight will be working with Hyperledger, for example, which is a consortium of large firms exploring private and permissionless ledgers for things like supply chain management. This is what the enterprise absolutely wants, and we have seen Walmart and some of the largest companies in the world working on privacy with Hyperledger. At the same time, we can service traditional cryptocurrency needs, especially when you look at DEXs that want to prevent front running and these types of things. In decentralized exchanges, you can go to, this is the Blockchain Explorer. You can go to transactions and stuff and see transaction hashes, what wallets they're going to. Yep. So that's that. But now it was, oh yeah, Dune Analytics. They have some really good check out some of the dashboards. Okay, these are okay, let's check out the 1 inch. So they show daily average users, weekly average users, and transactions, volume per day. And you can get a good idea of where inflows are coming in, what's being traded, top trades, the pairs, all kinds of statistics. And you have people gathering this data on FTX and how they've manipulated markets and how they had no Bitcoin on their balance sheets. It was negative, somebody said, which is fucking unbelievable. Unbelievable. You can actually see transparency on the blockchain for decentralized exchanges. You know what they have on their books. And there's some other sites that go deeper than this that show more information, but just gotta know where to look. And I'm slowly exploring these. Exploring these as well. But Cardano looking to get in some privacy. Oh, I wanted to see Kachina. Let's check this out. They're usually super technical, these white papers. So I don't think, 88 pages. Yeah, that looks pretty cool. But I'll have to look at that more in depth. That's gonna be some in-depth stuff. And then last, some Zeta Chain news. I actually went to a Zeta Chain and Galaxy meetup in San Francisco a few weeks ago during San Francisco Blockchain Week. It was a lot of fun. I met one of the, I don't remember his position, but one of the guys from the team. I met the founder, like two of the founders, and got some inside alpha, which they just have dropped today. I think also in the Discord. Forgot I had the Discord up. Didn't have it up. Yeah, we'll get in here, check the Zeta Chain. Yeah, it was announced today. Jonathan, the guy, the head of community, is who I met. Really cool guy. Gave me some alpha, which is this right here. And today marks the launch of the first ever omni-chain smart contracts and native Bitcoin interoperability support on testnet. The upgrade makes Zeta Chain the only public blockchain with smart contracts that can access and manage assets, data, and liquidity on any chain. Learn more in our latest blog post announcement. Omni-chain smart contracts enable new paradigm for Web3 DApp building, unlocking concepts such as Bitcoin smart contracts. Right now in Zeta Labs, you can experience swapping native Bitcoin with no wrapping for other DeFi assets. I didn't see this up yet. Okay. So they're upgrading the network right now, but you can swap, the Bitcoin. So we'll be able to swap anything for Bitcoin, which you can't do on any other swap or bridge protocol. It's usually wrapped, which is a synthetic asset linked to the price of actual Bitcoin. So that way you can trade it on other chains, but it's not, that goes into a whole rabbit hole in itself. But this is really good. We'll dive a little deeper on Zeta Chain, and so it's a decentralized blockchain network and has what's called omni-chain smart contracts, where it links basically all networks, all blockchains, and can swap natively across any chain. It's very, very interesting. And they also offer some of the code to help improve. So when did the Zeta Chain project first take shape? Team got together over the course of 2021. Crypto wasn't still in a state where users either take on additional risk to use crypto, like operating through exchanges, questionable bridges, or jumping over many hurdles, to achieving even simple tasks. Zeta Chain took shape as an aligned effort to try to solve these issues and give a new, sane, safe, and pleasant default for more users to use and benefit from crypto. What problem did you see in the DeFi that needed to be fixed? When users onboard into the crypto ecosystem through a given DApp, this fragmentation makes immense barriers for the user to fluidly adopt or try a DApp on other chains. A few projects have emphasized the ability to interoperate, but the majority of interoperability systems only apply to specific blockchains, force and require significant protocol integration work, or are more one-off bridges than can have questionable security architectures. How can your network also natively work with blockchains that don't operate with smart contracts? Our TSS, Threshold Signature Scheme, implementation allows Zeta Chain to custody assets on external blockchains that might not have adequate smart contract capability, such as Bitcoin and Doge. So they implement to custody assets on external blockchains. This feature allows smart contracts on Zeta Chain to orchestrate assets like Bitcoin in a similar way to any other tokens on any chain. This capability looks much like Ethereum, where a smart contract can manage assets according to predetermined logic. The difference is that Zeta Chain's omni-chain smart contracts can manage assets from anywhere as opposed to only assets on a single chain. So you can effectively have Bitcoin smart contracts or smart contracts that manage many different assets on different networks at once. And this is the power of smart contracts. Very, very powerful and can be simple but complex. So what advantages will omni-chain technology bring to end users? Users will have fewer hoops to jump through to use crypto whenever and wherever, or wherever and whenever. With omni-chain, we'll be able to build applications that abstract networks for many use cases, such as using any wallet and interacting with any application anywhere. There will be decentralized, true alternatives to things like centralized exchanges where you can transact any asset for any other asset. Overall, as an end user, you'll experience better and seamless UX, user experience, more freedom to do what you want across the entire ecosystem, lower risk, and minimize fees. Yeah, all the centralized exchanges, you can, swap tokens and stuff, but because the centralized exchanges aren't necessarily working on a blockchain network like decentralized exchanges are. They just sort of own the tokens and trade them, and they're not essentially, you don't have to worry about what chain they're on because that exchange just has all of the tokens already at their disposal. So if you want to swap from Ethereum to Bitcoin or Cardano to Bitcoin, you can do that in like Coinbase because they hold all the tokens there. If you use a decentralized exchange like Zeta, they don't own the tokens, but they use smart contracts to get the tokens that you requested, swap with the ones that you have. So it's kind of a little bit more complexity to it, but very, very useful. So will Zeta Chain be building platforms of its own, or will that be up to the users of the network? In addition to building the core protocol itself, Zeta Chain aims to build highly usable products and core functionality that help users interface with the network. It will also build tools to help showcase omni-chain DApps built on top of Zeta Chain by developers and partners. Of course, developers have the power to create anything they want on Zeta Chain, new protocols, platforms, new businesses, and new public goods. The Zeta Chain team is very close to the community and takes a lot of input in building and planning new features. The team also provides resources like technical help to developers and partners to build better and faster. How is Zeta Chain able to attract so many users during its beta stage? With anything Zeta Chain launches, we aim to have real, usable products for users to play with, learn about, and engage with. Zeta Labs was a big launch for us where the community can help contribute to Zeta Chain by testing native cross-chain asset transactions, and inviting people to do the same. At any given time, hundreds of people tweet about Zeta Labs and Zeta Chain. Our growth to date is largely people resonating with the real core problems we see in crypto, as well as having a tangible product to get a glimpse of what the future could look like. What do you think the biggest problem confronting DeFi is at the moment? The lack of usable, transparent, sane, risk minimized, and sensible options, especially when operating across many blockchain networks. Man. People tend towards the simplest solutions. The simplest across many verticals right now is often a centralized or risk-heavy solution. On top of this, the lack of good defaults results in a huge problem of fragmentation of liquidity, identity, and data. If DeFi is going to deliver on its promise, then truly decentralized solutions need to rival centralized ones in terms of user experience and opportunities, while also minimizing risk. With strong baseline security, Zeta Chain is working to deliver a good future-proof default for multi-chain so that more builders can create these experiences for more users. So it looks like this was in partnership with Zeta Chain. But I'll go ahead and say I met with some of the team. They're really, really nice, really cool. Seem like they're building some cool stuff. Yeah, you can swap. Go more into the blog post here. But it's very cool. Very cool. You can swap natively between any assets without wrapping, and that's what we need. Need more of these decentralized exchanges and protocols and swaps and bridges, and to help battle what's going on with where is he at? Where is this guy right here? This guy right here. And don't be following this fool, man. This guy is just ridiculous. And what's weird about this is all of the things he was typing, he was deleting tweets. And oh man. Yeah, he's just typing random shit to fill tweets that he deleted. Which is even more ridiculous, because why in the hell are you gonna... You know people are gonna be saving your tweets and looking hard. So it's very sketchy, very sketchy. Don't be like this guy. Don't be like this guy or this guy. Be a good human being. Now, we'll check the markets before we get out of here. Just be a good human being, man. Don't steal people's money. Don't defraud them. And I mean, there's people that work their whole fucking life to have some scum like this guy take it all away. It's a shame. But anyway, Bitcoin on the 1 hour, just still puddling along. In case we get anything, it's not really a great... I don't know. Let's see what we got here. See what we got here. Oh yeah, and if you didn't notice, I'm in my home office today. The other day at work, we got exposed to someone who, or we were around someone who had been tested positive for COVID. So we get to work from home. So I'm working hard. Got to get off because it's after lunch, and yeah, we're just trading in this range. The 1 hour. Let's check the 4 hour. Actually, I like this 4 hour one a little more with the wicks. Maybe. Yeah, just look at. Well, you just look at it. You just look at it. If we went down to this one, okay. If you want to kind of see it, that was the first one. It broke above it. Not really the greatest, but we'll see. We'll keep an eye on this, see how it goes. And don't FOMO into anything. If you're taking positions, make sure they're nice scalps and don't stay in anything long term. Oh, I meant to pull up the Solana. Yeah, I did earlier. Yeah, don't, like, if you see Solana, don't just go shorting it right now because it's already down so much. I mean, yeah, you can always drop more, but at some point you're gonna have to snap back up a little bit for a relief bounce. And I think, I don't know, it's hard to tell with what's going on. We'll have to monitor this Genesis news and stuff, but that being said, that is all I have time for today. Until next time, peace.